Well, the Canadian energy sector is looking to rebound today following significant losses yesterday in light of news coming out of Venezuela. Let's get more on how this impacts the broader markets from Nate Thooft. He's CIO and Senior Portfolio Manager at Manulife Investment Management. Nate, thanks as always for joining us. It looks like things are kind of coming back to normal. People are sitting and thinking about things now and realizing this is probably a long-term situation.
Yeah, 100% agree with that. I mean, the reality is, I think the market in general is looking at most of these risks and uncertainties that are developing across the world as a half-glass full type of opportunity set. And I think Venezuela is another example of that, where yesterday you were looking at certain companies, particularly some of the U.S.-based oil names, as well as some of the industrial names, benefit a lot with the perspective that longer term or even nearer term, you might get some benefit and some additional spending from the Venezuela situation, which at the second hand impacts more negatively some of the losers, which the perception was that might be some of the Canadian plays. The reality is this is a very long-term issue, as we're talking a decade, because it will take a very significant amount of dollars as well as time to really change the infrastructure within Venezuela.
And do you think we'll actually see that unfold? I mean, oil companies by their nature are fairly cautious. They look long-term, but they also have the political pressure. Do you see them moving ahead with that? I mean, Chevron's there, but other groups were there earlier. Can you see them going back in?
I think the administration has the intentions to help facilitate that. And I do think the companies, particularly some of the names that have operated there or currently do operate there, would like to operate there under a more stable type of political environment. And if they're incentivized to do so by the U.S. administration to do it, I think that's another benefit for them. And the proximity is not that difficult. Obviously, the infrastructure requires a lot of effort to rebuild it, and it's going to cost a lot of dollars from a reinvestment perspective, both on the part of the big oil companies as well as other names. But the reality is there is a very large oil reserve there that is underutilized. Venezuela only generates about 1% of the entire global output of oil. When you think about that relative to its own history, it's very low, but relative to just the absolute level, it doesn't move the dial from an oil production perspective today.
So what does this mean then for Canadian energy, Canadian oil? I mean, there's been so much comparison about the oil in Venezuela, the oil in Alberta, very similar. And are they competition for us now?
I think it means nothing in the next 5 years. Longer term, yeah, it does have an opportunity to create another competitor to Canada. But at the same time, Canada has options too. Canada can look to find other exporters to take their oil as well. And they've tried to do that over the years. So Asia is another opportunity for them. Obviously, that comes with some infrastructure build out as well. But it will be competition potentially for Canada if Venezuela does become more up and running, more stable, and has the infrastructure in place. But again, this is a 5 to 10 year type of dynamic before it becomes a reality, even the beginning stages of reality. So I don't think it has a lot of meaning other than sentimental and kind of fear meaning in the short term as it pertains to what the impact is to the Canadian names in this space.
Now, there's been a lot of focus on AI, on energy with everything that's going on with AI, the need for energy. Is that the best place to be, or are you looking at, do you see alternatives?
So when we think about the sectors, there's a number of areas that we see opportunity. The one area where I think overlaps very well with both energy as well as this idea of infrastructure build out is the industrial sector. So the industrial sector has a couple big benefits going on. One, even yesterday with the news about Venezuela, there was some benefit within industrials because there might be the perception there'll be some spending of new infrastructure build out for energy. Again, longer term play. At the same time, the industrial sector was benefiting from defense plays, which has been a pervasive benefit over the last kind of year or two as we see greater spending from a government perspective across the globe when it comes to defense spending. Most of those names live in the industrial sector. And then last but not least, but probably the most important, is a number of industrial names benefit from the build out of AI spending and the infrastructure required to do that. So if you're trying to play the energy space and some of the infrastructure, we think taking the other tailwinds coming from AI spending as well as defense spending, packaging them together and looking at some high quality industrial names is probably the best way to play it.
Okay, and also you're saying look outside of North America as well.
Yeah, a few other areas we like outside of North America. We do think there's opportunities still within the Japanese market. It's off to a good start this year in the first couple of days, but we do think there's some real valuation opportunities there. There's some secular trends in place. There's governance trends in place, improving margins, a lot of companies, potential for M&A activity, et cetera. We're also like some of the areas in emerging markets. I think China's increasingly looking better. Some of the worst of it is behind, even though there are still some concerns around property. There are some real benefits from a stimulus perspective coming in. And then also more broadly throughout emerging markets, there's opportunities as well, partly driven by their own tech AI spending initiatives that are focused on building out the infrastructure of tech across the emerging market world.
With Japan, any concerns with the yen?
The yen is always a bit of an interesting dynamic when it comes to Japanese stocks. Japanese stocks like a weaker yen. But that doesn't mean it has to be pervasively weaker. I think as long as you have a more stable yen environment, even if it's a modestly appreciating yen because you're trying to normalize monetary policy, as long as it's gradual and somewhat stable and doesn't happen quickly, the yen should not have a meaningful negative impact on the stock market there. The challenges arise when you have very sharp moves in the yen that drive the perception around the stock market in Japan.
Okay, we'll have to wrap it up there. But Nate, thanks as always for joining us. Happy New Year to you.
Thank you.
Nate Thooft is CIO and Senior Portfolio Manager at Manulife Investment Management.